Every trader, no matter how experienced, has faced that moment. The market moves sharply, your heart races, your palms sweat, and your mind fills with noise. Do you sell? Do you buy more? Do you hold and hope? Emotion floods your decisions, and what once seemed like a carefully laid plan turns into panic or greed or fear. Trading isn't just about charts and indicators, it's about controlling yourself, your emotions, your impulses, your doubts. Because in the market, your biggest enemy is rarely the trend. It's almost always your own mind. Let's be honest. Trading is hard. Not because you can't learn the mechanics, but because executing a plan under pressure takes mental discipline. It's like being in the eye of a storm and having to calculate a math problem while everything swirls around you. You can have the best strategy, the most advanced tools, and still blow up your account if you let emotions take over. And it happens to everyone. No one is immune, not even professionals. The difference is how they respond, how they manage, how they build systems to protect themselves from themselves. Controlling emotions while trading isn't about suppressing feelings. It's about recognizing them, understanding their source, and then making decisions from a centered place. It's about self-awareness, emotional intelligence, mental habits that keep you grounded even when the market is anything but. Let's start with fear. Fear is primal. It's there to protect us. In trading, fear often shows up as hesitation. You see a setup, but you don't take the trade. Or worse, you're in a trade and the price dips slightly, and fear convinces you to close early right before the reversal. Fear convinces you to avoid risk, but trading requires risk. So how do you manage that tension? First, you must define your risk ahead of time. Every trade should have a predetermined stop loss. Not just mentally, but structurally. Placed. Locked. No negotiations. This single step removes a huge chunk of uncertainty. When you know how much you're willing to lose, fear becomes manageable. It doesn't disappear, but it loses its grip. Then there's greed. Greed shows up when things go right. You're in profit, and you want more. You ignore your exit plan. You keep riding the wave. Then the market reverses. You went from green to red. The pain isn't just financial, it's emotional. You feel foolish. And that leads to revenge trading, trying to win back what you lost because of greed. To counter this, you need to define your take profit levels ahead of time and stick to them. Use alerts. Use partial exits. Have rules that are non-negotiable. Greed thrives in open loops. Close them with structure. Celebrate consistency, not windfalls. Now let's talk about frustration. Frustration arises from expectations. You expect a trade to work. It doesn't. You expect a trend to continue. It reverses. You expect your plan to perform. It underwhelms. Frustration builds not because of the market, but because of your relationship to outcomes. Trading is probabilistic. That means good trades can lose and bad trades can win. You are not judged by individual results, but by long-term execution. One of the most powerful emotional skills in trading is detachment. Not apathy, but detachment from the outcome of a single trade. When you take a loss, your brain will want to judge you. Your ego will scream. But if you followed your plan, you did your job. That's what must be rewarded. Process over outcome. Trade quality over trade result. When you make a shift, frustration fades. You begin to see the market not as a judge of your worth, but as a field of probabilities. And in that shift, you gain freedom. Impatience is another silent killer. You open the charts and you want action. You want to trade. You force setups. You shrink timeframes. You start trading noise. Why? Because you're bored. You crave stimulation. But trading isn't about excitement. It's about opportunity. And opportunities don't arrive on your schedule. Impatience causes overtrading. And overtrading bleeds accounts. The solution is in structure. Have a predefined trading window. A ritual. Stand. Set alerts. Walk away. The best traders spend most of their time waiting. Waiting for the right setup. The right alignment. The right moment. Master the art of waiting and you master the market. Let's explore another layer, identity. Many traders tie their self-worth to their P&L. A good day means they feel like geniuses. A bad day means they feel like failures. This emotional roller coaster is toxic. It erodes confidence. It distorts clarity. The truth is, your identity must be separate from your results. You are not your win rate. You are not your equity curve. You are a person who trades. You are a person learning a skill. Some days you will win. Some days you will lose. But every day you show up, you're evolving. Create an identity that isn't about performance, but about discipline. I am someone who follows the plan. I am someone who takes smart risks. I am someone who tracks their trades and reflects. That is sustainable. That is powerful. Let's talk about revenge trading. It starts innocently. You take a loss. You feel cheated. You want to make it back. So you enter again quickly emotionally. No analysis. No setup. Just emotion. This is one of the fastest ways to destroy an account. Because it's not trading anymore. It's gambling. The antidote is space. After a loss, walk away. Breathe. Write down what happened. Reflect. Did you follow your plan? Was it bad luck or bad execution? Process the loss before you re-engage. Build the habit of separation. Losses don't define you. Your response to them does. Overconfidence is another trap. You win a few trades. You feel unstoppable. You start increasing size, taking more risk, ignoring rules. Then the loss comes, and it's bigger than expected. But overconfidence tricks you into thinking the market owes you something. It doesn't. It never has. It never will. Remain humble. After a winning streak, reduce size. Reground yourself. Read your trading journal. Revisit past mistakes. Keep your ego in check. The market is the greatest teacher, but it punishes arrogance quickly and often. Now let's go deeper into the habits that build emotional control. First, journaling. Not just your trades, but your thoughts. Your emotions. Before the trade. After the trade. What were you feeling? What story were you telling yourself? Over time, patterns emerge. You begin to see your emotional cycles, your triggers, your blind spots. Awareness is the first step to mastery. Second, meditation or breathwork. Every trader faces adrenaline. Fight or flight. Cortisol spikes. Breath is your anchor. Even a single deep breath before entry can reset your state. 5 minutes of stillness before a trading session can change your entire mindset. Meditation isn't about spirituality, it's about clarity. Calm mind, clear decisions. Third, environment. Where do you trade? Is it cluttered? Distracting? Stressful? Your physical environment affects your mental state. Create a space that feels calm, organized, empowering. Remove distractions. Make it sacred. A focused space creates focused action. Fourth, routine. Great traders don't wake up and wing it. They have a process. Wake time. Chart review. News scan. Watch list. Execution rules. Review. Reflection. This routine becomes a container for emotion. It reduces randomness. And that consistency builds confidence. Let's talk about visualization. Before your session, visualize different scenarios. A loss. A breakout. A fake out. Picture your response. Feel the emotions. Rehearse staying calm. The brain doesn't distinguish between imagined and real experience. Visual rehearsal builds real resilience. It's mental reps for your trading mind. Now let's go even deeper to your beliefs. Your core beliefs shape your trading behavior. If you believe losses are failures, you'll avoid them, hide them, deny them. If you believe risk is bad, you'll hesitate. If you believe success equals constant profits, you'll feel like a failure during drawdowns. Examine your beliefs. Rewrite them. Losses are data. Risk is the cost of opportunity. Drawdowns are part of the game. Trading isn't about being right. It's about managing wrong. This belief set becomes your emotional foundation. Finally, support. Trading is lonely. Most people around you won't understand. Find community. Other traders. Forums. Mentors. A circle where you can be real. Share struggles. Share wins. Ask questions. Get perspective. Emotional control improves when you feel seen. Supported. Normalized. Because here's the truth, emotional discipline isn't a switch. It's a practice. A muscle. It gets stronger the more you train it. You'll still feel fear. You'll still feel greed. But those emotions won't drive you. They'll signal you. And you'll know how to respond. With presence. With poise. With power. Every candle on the chart reflects billions in emotion. But your job isn't to react. It's to observe. To plan. To execute. Your edge is not just your strategy, it's your state. The more you master yourself, the less the market can master you. So when the next trade comes and your heart beats faster, remember this, you've trained for this. You've done the work. And no matter what the market does, you know who you are. Calm. Clear. Controlled.